Hey, Mad Money fans, check the bottom of your screen for an exclusive offer. Next.
My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to save you a little money. My job is not just to educate, but to put this into context. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. Let's face it. There's a considerable number of knuckleheads out there who simply won't be satisfied until Fed Chief Jay Powell says, my research had the stock market as a sell. I upgraded to a hold recently, but today, for no reason whatsoever, I am making the stock market a buy. So everyone knows it's all clear. Now, you aren't ever going to hear that. But people keep thinking you're going to hear something like it. The fact is that inflation's a much bigger worry right now than recession, okay? I thought that was obvious, but apparently not to the people who sold everything after the Fed meeting, where it's obvious that Fed's going to put through another rate hike. Dow closing off 77 points, not that bad. S&P plunging 0.94%, not so good. And the NASDAQ plummeting 1.53%. As I said yesterday, I think the Fed should put through 2 hikes. That's how hot this economy is running. Why can't people see that? But to humor all of those who think Powell is just being too hawkish, when will the Fed give us the equivalent of an all-clear signal? How about when it gets what it wants? How about when it gets inflation to stop for maybe 6 months? That's when you no longer need to worry about the Fed. And we are very, very far from that happening. It does drive me absolutely batty to listen to people who think the Fed's already won the fight against inflation, will soon remove any tough language. I mean, what is it based on? Labor's still tight. Housing's tight. Mortgage rates are high, and they've doubled. It hasn't affected housing at all. We have 3.8% unemployment with an inflation rate that's much closer to 4% than the Fed's targeted 2%. What's the disconnect here? Simple. If you look at the statistics I just mentioned in a vacuum, you would think the Fed should still be raising rates pretty aggressively, maybe it's a half a point from here. They've already tightened so much without seriously damaging the economy. What's another 50 basis points? While some prices have started to come down, meager, but they've started to come down, let me ask you, in your daily life, what's actually cheaper now than it was before the Fed started raising rates? What's so much cheaper that Jay Powell can declare victory, maybe even start talking about cutting rates? Hard to think of anything for me, right? Easy to think of many things that are much more expensive. For 2 years now, we've heard that the Fed's rapid rate hikes would soon cause a recession, which would then crush inflation and ultimately lead to rate cuts. That's not happening. So let me give you the disconnect as I see it. The people in the media, the economists, the strategists, the hedge fund managers, the billionaires, they don't go to the supermarket. Someone else goes to the supermarket for them. They're not the ones suffering from higher prices because they don't even know about the higher prices. Frankly, the supermarket budget of them is way too small versus the discretionary income that they have. These gas bags have either forgotten what it's like to not have a lot of money or they never lack for it all. They just don't get that it's a big deal when rice is up 50% in a couple of months, or a glass of beer is now $8 minimum, or scallions cost $2.99 a bunch, and a box of Annie's mac and cheese now goes for $5.49. I mean, you can use all the Fed speak you want, and boy, the reporters love to do that. But Powell doesn't care about that stuff. He's talking about the cost of scallions. He's talking about the wild rice blends. He knows the real score, even if the pundits don't. Now, I'm lucky. I got rich a long time ago. I admit that. I'm proud of it. So these prices would be an abstraction for me, too, except that my dad raised me to be a cheapskate, and I still go shopping. I know what price things cost. They're not an abstraction to Jay Powell either. He's thinking about how inflation makes it so working people need every penny of the minimum wage boost they just got at Bank of America, now $23 an hour, commitment to raise that to $25 an hour by 2025. He sees the UAW strike in Detroit, and he recognizes that inflation is driving us toward actual class warfare in this country that we haven't seen in maybe 60 years. I don't think he wants to be known as the Fed chief who goes down as the one who started the class wars. But this is not coming out of nowhere. The UAW's rank and file are simply trying to get better lake. They're not trying to get better lake houses. They're stretched right now in large part thanks to inflation. So it's no wonder they want more money. The strike's terrible for business. It's terrible for the stocks. I think it's a mistake the way they're negotiating. But the union never would have elected a hardliner like Sean Fain if they were happy with the nation's state of affairs, if they thought they were making enough money. Yet, the questioners and the critics, they just don't get it. They don't get that there are finally people in this country who are fed up with not being able to afford things. And the notion that prices are really coming down versus 2019, let's face it, that's just fanciful. Even the great equalizers, that's right, Amazon, Costco, Walmart, they can't roll things back to pre-COVID prices yet. Or to put it another way, the person who makes 45 G's a year isn't able to save $1,000 without cutting back big on something else. She's only going out on someone's birthday, and she's going to Olive Garden, which I like OG, but that's where she's going. She's not sending her kids to private school because she can't even afford the property taxes in a place with good public schools. So what has to happen? Well, the Fed can't truly beat inflation until we see the end of the bidding wars for the big houses that go on the market and are sold instantly on that first day. It can't do anything until we get more, not fewer rental apartments. We need to ensure that there are way too many cars for sale, so many cars that the financing charges won't make it prohibitively expensive to buy one. We need to get to the point where lower income wage earners who are extremely frugal and can save $1,000 don't look at that money 3 years from now and say, darn it, why did I save that? Now it's only worth $800. Look, I'm not trying to foment class warfare on this show. Maybe I just remember what it was like to live in my 1978 Ford Fairmont, trying to figure out where I could get a button-down shirt to go with my corduroy Marshall's jacket, or hoping for prices to come down so I could buy a new pair of Levi's were too expensive, at the horrible store that was Mervyn's. There are so many people who are just hanging on, and they can't spend any more on gasoline than they are doing right now. But there's a good chance it's about to get more expensive, we said last night. Yet Jay Powell's bombarded with these clinical questions from people who don't know how much it costs to buy a box of Oreos or a can of string beans or a thing of Ho-Hos. They aren't the ones trading down. They're not the ones giving the dogs cheaper food because they know the dogs aren't going to say anything about it because they're always hungry anyway. Turns out when push comes to shove, it's easy to cut back on the dogs. They don't even know the difference, trust me. Here's what Powell wants. He'd love to see prices to come down without lots of layoffs. But if they don't, he'll raise rates until those prices come down, even if there are a lot of layoffs. He's willing to inflict the pain because he knows that long-term, the damage done by inflation is far worse than anything else that could happen right now. Or to put it succinctly, Powell needs you to stop focusing on the terminal rate or the neutral rate or the jolts or the price of mortgage backs. He needs you to think, prices are coming down. I'm going to wait until they even go lower. Right now, though, it's the exact opposite. The mentality in this country is, and you know it and I know it, prices are going higher. I better buy things now. And that's the only thing you really need to know. Inflation is embedded and expected. Bottom line, sure, Jay Powell's done a good job getting inflation down from the highs, and I'm proud of him. But back then, things were really, really out of control. Now they're just moderately out of control. Maybe that means Powell's almost ready to take the stock market from sell to a hold, or maybe he'll know the time to stop tightening when he sees it, and not before then. Either way, don't look to Powell to tell you to buy stocks. Look for him to save the purchasing power, not of you, but of the working person. Unless, of course, you are the working person. Let's go to Dave, my old friend in Illinois. Dave.
Dr. Cramer, my adorable lunatic friend, how are you?
Well, I thank you for putting me in the true context that I'm in, and I appreciate that. And so will Lisa, my wife, as you know, Dave. What else is going on?
Jim, 3 days ago, this $30 billion healthcare company received a $44 million grant from the Gates Foundation to develop AI-assisted ultrasound applications. A component of your charitable trust portfolio, it enjoys your highest ranking, despite its current price being lower than your average cost. Of course, I'm talking about GE Healthcare.
Yeah, Dave, it's killing me. It's killing me. You know, I'm going to talk tomorrow at the meeting, and it's very funny because Jeff Marks is rarely aggrieved. He's much more consistent than I am, he's like a Penn State running back, frankly, who goes pro. Me, I am apoplectic about this thing. I want to go to the sellers, and I want to say to them, do you have a clue of what you're doing? Listen to what Dave just said. But you know what they're going to say, Dave? No. We're smarter than Dave. We're smarter than Cramer. Well, you know what? Go eat an MRI. How about let's go to Geronimo in Alaska. Geronimo.
Hi, Jim. First-time caller here. With the ongoing streaming war amongst Google, YouTube TV, Disney's Hulu, and Dish Sling TV and others, do you think Fubo Sports' focused niche can buy enough subscriber loyalty and market share to make it a winning stock in the streaming battle?
No, absolutely not. And I would be even more curt, except for I like Alaska so much and I had a great time there when I went with my kids. Let's go to Bob in, oh my God, but I got Bob in, no, they're telling me I can't go to Bob in Florida. And I was looking to connect. No, that's okay. I connected with Fubo, all right? Fubo, or is it Fobu? I don't know. It ain't working. to look to Powell to tell you to buy. That's right. We're waiting for Powell to say he's got a buy. He has a buy button right in the Fed. He's got this, and he's going to press it one day for us. Look, he's trying to help the power of the. He's trying to help the working person. He's not trying to help the pundits or billionaires grow. Mad Money tonight. Trex is caught in the crosshairs of higher long-term interest rates, and the housing complex is beginning to show a couple of signs of slowing. So are investors getting a buying opportunity, or should they proceed with caution on the faux wood deck company? I'm getting the latest from the CEO. Then last night I revealed some companies with monster buybacks that I think we're spending irresponsibly, and we're a bunch of bozos, jokerheads, mountebanks, and charlatans. But tonight I'm revealing a handful of people who are actually doing it right. And it's football season, which means wings are flooding living rooms all across the country. Don't forget, I like the ones that are like this, not the ones that are like this, you know? And I'm hearing more about the strength in the sector with the head of a real winner, and that's called Wingstop. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.